access to an enormous amount of cash. There are millions of savers out there getting little or no interest on the savings. The general consensus is people like to do good with their money, and so if there's a local business or even a national business that they like the look of, there are tax incentives now for them to say lend £10, £100, £1,000, and it's only going to drive more funding to small businesses, where at the moment the banks are traditionally saying no to those small businesses.
Do you see there being any risks?
There's risks naturally with everything. It's very important for investors to be aware that from a debt crowdfunding perspective, your money's not covered by the Financial Services Compensation Scheme, so there is a chance that all your money may go. That's a very real risk. However, if you spread your risk across, say, 1,000 businesses, you can diminish that risk. So the crowdfunding model allows you to spread your risk over multiple businesses and investing in figures that you feel comfortable with, whether it be £10, £1,000, or in our instances, we had a number of investors put in £100,000.
Do you think the big banks should be fearful?
I think they need to be aware. Fearful is probably a strong word. The big banks have got such a dominant positioning in the UK, controlling probably 98% of all finance. There are a number of banks should be applauded, such as Santander, who've recently embraced crowdfunding by referring turned down borrowers to the likes of Funding Circle. We'd love to see the same for our platform for consumers and small self-employed individuals.